This is Mamuni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. In this video, I'm going to discuss and explain in detail number 1, what is accounting principles or concepts or conventions. Number 2, what is business entity concept with examples. Number 3, what is the importance or significance of business entity concept. Number 4, what are the limitations of business entity concept? Number 5, what are the implications of business entity concept? And number 6, how does business capital work? So let's get started. Chalo, shuru kara jak. Business entity concept is an accounting principle or concept. So what is accounting principles or concepts? Accounting concepts are the generally accepted rules and assumptions that assist accountants in preparing the financial statements. These rules are usually called generally accepted accounting principles or GAAP in short. These principles have been generally accepted by accountants all over the world as general guidelines. Accounting principles are described by various terms such as assumptions, conventions, concepts, doctrines, postulates, etc. There are many accounting principles or concepts, but today I am going to discuss about business entity concept. Okay? So what is business entity concept? The business entity concept is also known as separate entity concept and economic entity concept. Okay? Business entity states that transactions of the business organization must be recorded separately from those of its owners and any other business entity. In other words, while recording transaction, that is all incomes, expenses, assets and liabilities in a business, we take into account only those transactions that affect that particular business. The business does not record personal transactions that affect the owner of the business. Why? Because business entity concept states that business and the business owner are two separate entities and therefore should be considered separate from each other. Moreover, business entity concept states that we should always separately record the transactions of a business and its owners, because if transactions of a business are mixed up with that of its owners or other business, the accounting information would lose its usability. Okay? The business entity concept of accounting is applicable to all types of business organizations, that is sole proprietorship, partnership and corporation. Okay? Understood? Now let me make you understand business entity concept with 3 examples. Example number 1. Suppose Mamuni owns a business and she uses 2 different credit cards. One credit card for the payment of business expenses and the second one for the payment of her personal expenses. Okay? She pays rupees 4,000 as the electricity bill of her business using her personal credit card. According to business entity concept of accounting, the electricity bill of the business should have been paid using the business credit card. The payment of rupees 4,000 using personal credit card would therefore be considered as the contribution of additional capital by Mamuni. Okay? Now let's see example number 2 so that you can understand business entity concept. Example number 2. Baba has acquired a floor of a building having 3 halls for rupees 6,000 per month, rupees 2,000 per hall. Okay? He uses 2 halls for his business and 1 hall for his personal purpose. According to business entity concept, only rupees 4,000, that is the rent of 2 halls, is a valid expense of the business. Why? Because one hall costing rupees 2000 per month is used by Baba for his personal purpose. Okay? Understood? Now let's go through the example number 3. Example number 3. Ma is the owner of a business and she lends rupees 10,000 as loan to her own business. But this transaction would be strictly recorded in the books of the business as the business liability, and the business needs to repay Ma back the loan amount rupees 10,000. Okay? Understood? Now what is the importance or significance of business entity concept? The importance or significance of business entity concept are as follows. Number 1. The business entity concept is essential to measure the performance of a particular business in terms of cash flows and profitability. Number 2. It helps in assessing the financial position of each and every business separately on a particular date. Okay? Number 3. It becomes difficult and challenging to audit or distinguish the records of a business if the transaction of the business and the owner are not recorded separately. If the transactions of the business and the owner are not recorded separately, then the transactions would be mixed together. Okay? And it would create an inaccurate representation of the financial position of the business. Number 4. If a company ignores the business entity concept, it would not be able to compare its financial position or financial performance with that of other business organizations in the industry. Okay? Number 5. The concept ensures that each and every business entity is taxed separately because the taxation of each business varies. So it helps in calculation of separate taxes for the business and its owners. Okay? Did you know the main motive of implementing the business entity concept is for the purpose of honest taxation by the business owners? As we know, each business and the owner is taxed separately. Therefore, the business owner cannot show his income under a loss-making business of his own to escape from paying the taxes. And that is why the business uses separate recording books to record transactions for his business and his personal use. Understood? Number 6. It helps in asserting the value of assets and liabilities of a business in the event of any legal action taken against the business. I hope you understood the importance or significance of business entity concept. Now, what are the limitations of business entity concept? The limitations of business entity concept are as follows. Number 1, since the business is separate, the owner's true value or net worth is hidden or is not visible. Okay. Number 2, the owner makes a budget for the business. It reflects the net worth of the business and not the owner. Number 3, since the personal expenses of the owner and the expenses of the business are recorded separately in 2 books, it becomes very difficult to manage more than one business records and to get the correct financial position of the business and the business owner. Okay? I hope you understood. Number 4. If the financial records of the business and the owners are compromised or become mixed, then it becomes very difficult for auditors to separate the information of the business and its owners. Okay? Number 5. When the business owner lends money in the business, he is required to see the amount as a loan because he needs to repay himself back the loan amount. Okay? Because business entity concept is applicable here because the business and the business owner are 2 separate entities. Okay? And the last limitation of business entity concept is number 6. The person behind the business is the business owner, but the reputation of the business is noticeable and not the business owner. Okay, I hope you understood the limitations of business entity concept. Now, what are the implications of business entity concept? The implications of business entity concept are as follows. Number 1, assets and liabilities of the business are separate from assets and liabilities of its owner. Okay. Number 2, income and expenses of the business are separate from the income and expenses of the owner. Okay. Number 3, transaction related to the business and transaction related to its owner must be recorded separately. Okay. Number 4, the last implication. Decisions dealings of business owners in their personal capacity has no burden on the business or vice versa. Agreements and contracts of business owners in their personal capacity are not agreements and contracts of business. Okay, I hope you understood. I hope you understood the implications too. Now the last one. How does business capital work? Capital is the initial sum which owners bring into the business. Business owners bring in capital either through cash or bank or in the form of assets. So capital is important to a business operations and growth. Capital represents the funding that allows a business to buy assets necessary to function and stay competitive. Capital helps a business to grow by providing the assets it needs to generate more revenue or profit. But capital is a form of liability to the business. That's because its general practice is to consider the business separate from its owner. That is business entity concept. Okay? I hope you understood and everything is clear now. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful. I'll catch you all again in the next video. Till then, keep rising and keep shining. Bye-bye. Take care, stay safe and stay blessed always.